I've gotten into this habit where every day I get up and I take a look at my 401k balance. Oh, they already laughed. I'm going to introduce you to Brittany and Jay Hagy. They are on for the first time with Alon Planning Partners, and they are in East Brainerd, have chosen to come back to Chattanooga after getting married here a few years ago to help us all with our finances. I have been one of those people, Brittany, who kind of watched at the end of 2022 and I thought, it's coming.
Most folks have. Right?
Yeah. And so, but I thought, I'm not gonna worry. I'm just gonna be calm. So what has happened? I've been on a roller coaster ride. I've dipped a bit, then I've come back up.
That's right.
Right? So did I do the right thing, at least in holding steady?
Oh man, so there's a lot of things to consider when looking at that, right? So for some, that fear in that emotional roller coaster that we're all on, that fear may be warranted. Oh, should I make a change? What should I make some adjustments? But oftentimes, if you have a true financial plan where you have a course charted, the best decision can often be to just stay the course, right?
Okay, so I want to know about a true financial plan, and Jay, I want to throw this one your way because I'll compare it to weather. If your house has a good roof on it, the storms come and you're fine. So y'all chose your name for that very kind of metaphorical reason. What does Alon mean?
Yeah, Alon is actually the Hebrew word for oak tree. So we wanted to create plans for our clients that are strong and stable and that flourish in every season. And so we find ourselves in a economic storm right now. You know, we find ourselves January 2022, the market started going south, and by June we're in a bear market, right? And so most folks have looked at their 401k balance or their IRA balance and done like you, gripped on, like hold on tight, right?
This morning I went, yay.
Yeah. But you know, folks that have a crafted, comprehensive financial plan that includes investment management, tax planning, estate planning, that's well-rounded and well-rooted, can have more peace and stability when they're going through the storm to understand I have a plan for the buckets of money that I've established so that I know even in times of uncertainty and economic downturn that there's going to be some stability there for me.
So I'll speak to that really quickly. If you have a comprehensive financial plan and you are one of those who is looking at your 401k every day, that's going to keep you on this emotional roller coaster. And too often what happens is when we live in this place of it's high one day, it's low, where it's sinking for 7 days in a row or something, it breeds fear. And when we feel this fear, we make these knee-jerk reactions and end up making decisions to our detriment.
Okay, I know there's a lot we want to cover, so I'm going to stick with the stocks for just 1 second.
Sure.
I was told once, though, that if you are on that 7-day decline, that really can also work to your advantage because you're able to buy a lot more, and when the market does come back up again, you're going to really profit.
Well, that's the dollar cost averaging portion, right? So if you'll stay and you do have cash reserve and you are planning well and you can buy the dips and you can dollar cost average in, you're going to, you know, come up with the market on the rebounds. And so that's going to benefit you greatly. So ultimately what you want to make sure is that you have a secure plan in place so you're not making emotional decisions to pull everything out or push everything in at one time, right? Because when we're making those knee-jerk reactions, we're not really thinking clearly a lot of times.
So something that y'all share with me that I think is fairly unique to you, I think, is that you don't have to have a certain portfolio balance to come and take your advice.
That's right. We have no minimums for the investment piece, and we really set our hill on the financial literacy and financial education. We have a passion to empower people to understand their finances because it can be really daunting and really overwhelming. So we want to make it simple. We want to make it simple and put it in terms to where we can understand. You can feel confident in your plan. You can have even knowing the right questions to ask with your financial advisor. That's a big thing.
Okay, to that end, what is one? What is a question you ought to ask?
I mean, there are many that you need to ask, and you know, we can walk through each of those. But one, like, I would want to know the person that I'm speaking with. How are you licensed? How do you get paid? And why should I take advice from you? I mean, that's pretty much a normal question that we get a lot. And so being a independent fiduciary only advisor, meaning that We don't work for a big institution. We work for our clients only. That is something important that folks need to know, that somebody giving them financial advice is sitting on the same side of the table as them, right?
Right.
We're not trying to sell a product or push a certain vehicle, but we are utilizing all vehicles to make sure it fits the plan that our clients have.
I know that you know, part of what your strength is that you know how to have 6 people come through your doors a day and see each one of those as the individual person that he or she is. Yet you also probably just know a few things from doing it all the time. But are you part advisor and part counselor?
It's funny you say that, because
Mostly,
we actually talk about that all the time, how there really is this balance of two, because there is a recent study that Vanguard did, talked about the importance of a financial advisor in someone's life, and the biggest impact that a financial advisor offers to a consumer is the behavioral coaching. When to and not to
Control
move.
your emotions,
Yeah, controlling
right?
your emotions so that, again, we're not making those knee-jerk reactions.
Money's emotional to us all. We all have, you know, very strong ties and emotions when our money's going down really fast. And when
It
it's going up,
impacts us,
you know, when
Yeah,
it's
it's
going up,
euphoric.
we're elated, right? And so we have to make sure that we have a plan that can stay constant. We usually act as counselors, as personal trainers for folks like in the finance world. I need a personal trainer in fitness a lot, right? Like, and so folks come in for that personal training advice to say, hey, am I on track? What should I be invested in? Here's the time horizon that I have. Here's the goals and the assets that I have. How do I make sure that I'm going to reach those goals? And coaching folks to that, to where they're not making emotional decisions, is very key in what we do.
Do you think that some people delay coming in to meet with a financial advisor because they're afraid of being judged?
Absolutely, that happens. And we talk all the time about how in our office we've created this environment to where there's never any pressure, there's never any obligation, and there's never any judgment. It's, we all are walking through different things in our lives,
right.
and we want to just offer solutions. We are solution-based planners.
So you came with some plans of your own today. I don't want to prevent you from being able to discuss those a little bit. So you mentioned financial literacy is a big part of what you do. Can you give us, we're in a bear market, you say.
Sure.
What does that mean?
So a bear market means that from the top of the market, we've fallen at least 20%. So we've come down 20% from the highs of the market, and we found ourselves in there June of last year, and we've continued to be volatile. It's continued volatility throughout the market.
Right.
So there's a lot of things that you can do. Obviously, having a plan is one, but a practical one is making sure that you have proper diversification. And so if I was going to give some education this morning, I would say make sure you're diversified between 5 asset classes. A lot of people's like, well, does that mean I just have different types of stocks, right? Like, or different types of bonds? Well, that's a part of diversification, but ultimately, Warren Buffett, you may know that name, he says that investing is simple, but it's easy, but it's not simple, right? And so the simple part of it is there's 5 assets that we can hold. That's cash, real estate, stocks, bonds, and commodities, right? And if I'm doing that in a fast manner, right, I would go a little bit slower for most folks. But we want to make sure that we have proper diversification among all asset classes, not just different types of stocks and different types of bonds, but that you literally have real estate in your portfolio, that you have commodities, which is gold and oil and wheat and things like this, that you have different sectors of stocks in your portfolios, because you don't want anything over correlated going the same direction too fast.
All
And
your
then
eggs in one basket,
different
so to
types of
speak,
bonds in your portfolio, and cash is actually an asset class, so that you do have cash on the side, like you talked about. If the market goes down, that we have cash reserve that we can buy at the bottom so that we can get a larger rebound. So diversification in this economy, in this environment, is going to make or break your portfolio.
Well, and something else that we can do to that as well is ensuring that you have an emergency fund. A lot of people don't have that emergency fund, and so that means that they have to go into their investments and withdraw when the market is down, which means you're locking in your losses.
That's right.
And you're losing some potential for the upside growth.
Right. How important is it to have dividend-paying stocks?
Oh, I mean, in this environment, it would be very important. I mean, that's a part of your portfolio. Having stocks that are actually paying you to hold them as well, even the ups and downs. We use dividend-paying stocks as a large part of our portfolios. So,
Does the way you invest in your stock, I'm going to go with that for a minute, because almost everybody watching probably has a 401k, which is kind of their typical investment in the market. You change that with each decade of your life?
Yes, really with each goal that you have. It's
Okay.
not just the decade of your life, because time horizon actually makes a difference when I'm going to use that bucket of money. So I could be 20 and needing to buy a house next year, and I'm going to invest that money differently than I am going to be the stocks and bonds and assets that
For
I have
retirement
for
funds.
retirement planning. So it's, yes, decades matter, time horizon matters for retirement planning. But it really, we focus on goals. We focus on retirement planning as a large one, but then what other financial goals do you have, and how can we set up the funds that you have in order to reach each of those goals?
When you read about the Dow dropping X number of points or the NASDAQ going up, but you'll talk about, I think this is the right phrase, that the Dow dropped below 3,000. Is that right? You hear that a lot, that we don't want the Dow to drop below. Isn't that the benchmark?
Well, that's the
3,000?
S&P 500.
Oh, see, I don't even know what I'm talking about.
So the Dow's 30,000, right?
Okay, so the S&P is the 3,000.
Yeah, the
What does
S&P is
that
at
marker
4,000
mean?
right now.
What does that marker mean? How do they choose
So
that
a benchmark? So like typically you have three main indices when it comes to stocks, right? You have the Dow, which is really, folks don't understand, that's only the top 30 stocks in America. So the large cap top 30 stocks is what comprises the Dow. So when we look at that, folks look at the Dow a lot of times and like panicking because of its going up and down, but it's really just an indicator of how we're doing economically.
Ah, okay.
So that shows the largest companies, how they're producing, and how our economy is doing. The S&P 500 has over 500 stocks in it, but it's more diversified. So we use that a lot of time as a benchmark for
Okay.
portfolio analysis, and we're saying, hey, this is what, because it's more diversified within the market and there's more stocks involved, we can get more of a baseline to how the economics and the economy are doing.
Okay.
So obviously this year and last year it's been very volatile, and inflation's played a huge part in that, right? And like the Fed's been forced to raise interest rates higher than they've had to in a long, long time because of inflation being up larger than it has in 40 years.
Since those interest rates rather, are going up, if you had the cash, is it a good time to look to buying, a CD or something like that, because you're going to get more for your money?
Well, again, the way that we talk through our planning is back to what we just said a moment ago. It's purpose-based.
Okay.
It's not product-based.
Okay.
So it's based upon our individual clients' needs and goals, and as he mentioned earlier about the time horizon, how long before they need that money, what's that look like? So it's more than just, is this product or this investment better than this? It's
Right.
more about how well suited would that type of investment be for the specific individual.
Okay,
That's right.
so when people come to see you, how much time should they plan on being there for that initial meeting, and what should they bring with them?
Great question.
Yeah, we typically take 45 minutes to an hour, and we'll give you a no cost, no obligation review of your portfolio, or I've never done a financial plan before, I have no idea where to even start, right? We have plenty of those folks come in, and we welcome that, because that's the folks we want to help as well. Because if you do not have a financial plan, we need to let you know what that is comprised of and how to get one, because everyone needs a plan.
Okay.
So 45 minutes to an hour is typically our first appointment process, and we will walk through your specific financial situation. You need to bring with you things like your spending plan. I know if people have comprised that from the word budget, but the spending plan is what we refer to as well. You need to bring that, so your income and your expenses, basically. You need to bring any retirement account that you're already associated with and that you're utilizing, so that we can see, okay, here's what's going on in that for you, and give you some peace of mind. Are you on the right track? Statements for those things. And then we just want to talk through your goals. We want to know about you. We want to know what makes you you, and what goals that you have financially, not just retirement planning, but what other goals may you have that we can help you reach.
And some people, again, may not even know the questions to ask. We've had people say, well, I don't know really what to ask when I get there. That's okay.
Right.
That's all right. We have these prompting
Neither
questions.
did I.
Yeah, we have these questions that we can bring and bring up and begin conversation, because the goal is to hear from you.
That's
we
right.
cannot put together a comprehensive financial plan if we don't hear from you and what your goals, your purposes, your desires are for your financial life.
That's right.
Then let me give you their phone number. And remember that Alon means oak in Hebrew.
That's right.
So that's a great starting point. They're on East Brainerd Road. 315-1441 is the phone number. alonplanning.com
That's right.
is their website, and they'd be happy to hear from
Absolutely.
you. Thank you both so much.
Thank you so much.
Julie.
I learned a little.